When it was 1 and 2%, it was fantastic.
So that's ideal for a first-time buyer.
And obviously that had the huge boom in terms of the market.
When you get property in your blood.
I don't know, it was a little bit difficult for us because we didn't really know what we wanted.
Ladies and gentlemen, welcome to episode 1 of the First Time Buyer Show, where we speak to mortgage advisors, estate agents, property developers and accountants who are experienced in the property industry. Today, we've got our very special guest on episode 1, Helen Fernio of HF Associates. Helen, how are we doing? You okay?
I'm good, thanks, Peter.
Good stuff. Thank you very much for joining episode 1 of the First Time Buyer Show. So before we start, would you like to introduce yourself, how long you've been in the industry for?
Yeah, of course. So I'm Helen of Helen Fernio Associates. I have been a mortgage broker for the past 20 years. I know, I'm not old, don't look old enough. That's my theory. So I've been around for quite some time now, been helping thousands of clients over my career.
Amazing. Okay, but before we get into it, we need to start about the golf networking event. So me and Helen had a networking event the other week and we were meant to play in a 4-ball, but someone threw the towel in. What happened?
To be fair, it was absolutely bombing it down. As I left you all and I was driving down the M58, aquaplaning down the M58, I was not sad that I left, to be honest.
Don't blame you. Do not blame you. Hole 2, absolutely drenched through, so good call.
Yeah, I'll wait until the weather's better.
Absolutely. So, like you're saying, you've been in the industry for years. Touching about that, you must have, seen the 2008 crash, absolutely everything. Do you want to let us know what happened?
Yeah, so I started my broking career in the mid 2000s, when it was a very different world than it is now. So pre 2008, getting a mortgage was pretty easy, to be fair, which is what caused the 2008 crash. Post 2008, it became a lot more difficult. There was a lot more stringent rules put in place, which are there really to protect the borrower more than anybody else, which is probably good news as a borrower. The market is probably different again than it was in the early 2010.
I can imagine.
But throughout it all, it is a case of, I think one of the questions I get asked a lot is, when is the right time to buy?
Yes, of course.
And the answer generally is when you're ready.
Exactly.
You shouldn't try and time the market.
100%. So, talking about HF Associates, how many members of staff have you got?
So we're now a team of 17.
Wow.
I know.
It's growing fast, isn't it?
It's a lot of people.
Growing fast, absolutely. And I mean, you've been experienced mortgage advisors for years.
Yeah.
How are your staff? What are they like? What do they bring to the table?
So we've got a mixture of staff in the team. So we've got 3 administrators whose primary job is to look after each and every client to make sure that they know exactly what's going on throughout the whole process. It's probably the most stressful thing that people do, either moving houses or remortgaging. So we like to make sure that they are not stressed. So that's what the admin team do. And then in terms of our advisors, we've got an experienced bunch. We've got advisors that have been in the industry almost as long as myself. And we've also got advisors that have come from a banking background, so have seen the other side of it, shall we say, working for the bank as opposed to the client. And then we've actually just taken on 2 trainees. So
Amazing.
We're looking to train our own advisors to make sure that it's done correctly.
Great. So, I mean, if you join HF Associates, it sounds like there's a lot of progress in place there.
There is, yeah. So, in fact, one of our admin ladies is just about to train up to advise as well.
Amazing. Okay. What are the biggest challenges you've had since starting HF Associates? I mean, you're 5 years strong now, aren't you?
We are, yeah. So we were 5 years old a couple of weeks ago.
Yes, we had a nice celebration.
So we had a nice party to celebrate. It was good.
Yes, yeah.
It is challenging. Running a business is tough. I'm sure you know yourself.
Of course it is.
It's tough. The biggest challenge is looking after your clients whilst growing a business. I'm very conscious that clients come first. So I want to make sure that I'm always there for my clients. However, sometimes I've got to be doing other things as well. That's a bit of a challenge. Staffing's always a challenge.
Of course.
Trying to find the right staff.
Yes.
We're very busy, and I want to make sure that we've got enough staff to make sure that our clients are looked after.
Absolutely.
Yeah.
100% catered to. So, like we say, you must have wrote up a lot of mortgages, provided a lot to many clients. Yeah. What have you found the most rewarding part of providing someone a mortgage?
My favourite thing to do is ring a client to let them know that their mortgage offer has been issued, especially if that case has been difficult. Yeah, so if it's been tough and there's been a few challenges along the way, or they didn't think they were going to get a mortgage, the fact that you can ring them up and say, look, mortgage offer's issued, you can buy that dream house, that I do some work with some family solicitors as well. So that's great in terms of I'll often get a single mother who unfortunately is going through a divorce, which can be awful. And they think they're going to lose their family home. And if I can help her keep it, those ones make my day.
Absolutely. Of course. Now, touching on first-time buyers, I mean, it's something we're not really taught about, getting a mortgage.
No. There's no education around it in schools, none whatsoever. I think they send you out into the big wide world at 16 and go, here you go.
Yes.
Go and exist. Nobody teaches you how to run your finances. Nobody teaches you even the basics of saving, I don't think.
Of course, yeah.
We've actually tried to get into some schools to try and go through it with their sixth form. Yeah.
Amazing, yeah.
Easier said than done. So if you know any teachers out there that are happy for us to go and educate their
teachers, hit Helen up.
Yeah, we're happy to go and do that.
Yeah, amazing. Okay, so what have you found the most difficult part about providing a first-time buyer with a mortgage? Is it, there could be issues with their statements, or what have you found?
Yeah, so it's education, I think, with first-time buyers, because they don't know, or they've taken advice from their parents that say haven't had a mortgage in the last 20 years. And as I've said, the market's changed hugely. So it's an education side of it. A lot of the things that tend to cause them problems are car finance.
Yes.
Everybody loves a fancy car.
In terms of affordability of applying for a mortgage, let's just say I'm on a £30,000 salary a year. Yeah. How does it work? I mean, is it usually, 4 times the amount of your salary, take away the car finance? How does it all work?
So it's not quite that simple.
Okay.
So I think probably pre-2008, it was very much an income multiple. We earn this much. This is how much we'll lend you. We'll earn you 4 times salary, etc. Lending now is affordability based. So they're looking at everything. So they're looking obviously what income you've got coming in. One person on a £30,000 salary might take home more than somebody else on a £30,000 salary, because depending on what contributions they've got coming out of their pay slips, so they might have pensions, student loans, all sorts of things coming out of their pay slips. So, a 30,000 salary isn't the same for everybody, believe it or not.
Okay.
I know that doesn't sound true, but it is.
Interesting.
So looking at that, and then obviously they're looking at commitments. So obviously you standard credit commitments, but it's not just the monthly payment, it's the whole overall value as well. You could have a relatively low payment, but you actually have an awful lot of money in the background.
Makes sense. Okay. Okay, there you go. So you do take a lot into account before providing mortgage.
Childcare costs, all sorts of stuff.
Okay. And another thing which I get asked a lot by my friends is credit score. I mean, I'm sure you hear that a lot. How important is a good credit score? I mean, is there apps as well you can track it? How important is it?
Vitally important. If you're looking to buy a house anytime soon, you need to really take care of that credit file. There's loads of different places you can get your credit file from now. We use Check My File. I can provide you a link so that if people want to check it, they can check it.
Yeah, we'll put a link to Check My File.
So that just means that the reason we use that one is we can see all 3 credit referencing agencies on it. And it's not just about, they look at all sorts of things on your credit file.
Yeah.
So your high street lenders will be a computer says yes or no. Do you fit a certain box? Yeah.
Okay, yeah.
But there are lenders out there that will look at your credit file differently than a high street lender.
Okay.
But it is important that it's kept up to date. You're not missing payments. You've not got payday loans all over the show.
Yeah.
You don't owe more than you should do.
Of course, yeah. So you take a lot, again, like we're saying, into accountability. Now, I mean, when someone's growing up, they're not educated on the credit score. No. They may have a very bad one. They could have missed payments, or I don't know. Can someone with a bad credit score get a mortgage, or is it impossible?
No, it's not impossible. It's very rare that we can't fix somebody's credit file. If they've got a bad credit file, the chances are that they're going to have a more expensive mortgage than somebody with a beautiful credit file, or that they might need a bigger deposit than somebody with a beautiful credit file. What we've done in the past and what we continue to do for our clients is we like to see people before they go look at a house, so that we can establish what's going on with their credit file. Last thing I want is my clients falling in love with a house that they can't buy.
Yes, of course, yeah.
So we'll sit down with a prospective client early on, look at their credit file, see where it's up to, and see if there's any improvements they can make between now and them actually being mortgage ready. We'll work with people long term to make sure that. I think the longest one I've done is like 2.5 years, where I've sat with them and gone, right, this is not right, but this is where you need to get to. And we've checked in every couple of months to see where they're up to.
Pretty interesting. So in terms of your do's and don'ts, kind of what would you say to not do before applying for a mortgage application? Because I'm going to touch on something here. I had it previously where someone's had the mortgage offer accepted, but before they bought the house, they've taken out car finance.
Yeah, don't do that.
Do not do that.
Definitely don't do that. So if you've got a mortgage application in progress, don't take any new credit. A lender will more often than not run a final credit search before they release funds.
Yes.
Because they want to check that nothing's changed between offer being issued and them releasing funds. It happens more often than you think it would, where they will pull an offer because something's changed in the middle.
Yes.
Don't do that. Definitely don't do that.
Do not do that. Don't recommend that. In terms of as well, with providing the lender with the client's information, what do they usually need? Because when I'm doing my job, it's usually 6 months bank statements. We have to rigorously check them. Is it just 3 months? How does it work?
As obviously from your point of view, you've probably got a much stronger money laundering responsibility than we have.
Absolutely.
Does that make sense? So from ours, we're proving affordability as opposed to your checking source of funds,
AML check,
So we do a level of that, but we don't have to do it quite as stringently as you do. So for ourselves, it's ID, proof of address. Make sure your driving license has got the right address on it.
Yes, yeah.
Of
course, it's a nightmare.
People forget to change the driving
Absolutely.
licenses. So ID, proof of address. We're generally looking at least 3 months pay slips or 2 years accounts, ideally, if you're self-employed.
Yes.
And then 3 months bank statements alongside with proof of deposit.
Interesting. Okay, you touched on something there, saying self-employed. Now, I mean, I'm sure in the UK it's seen a spike of entrepreneurs recently.
Definitely. Everybody's got a side hustle.
Yes, of course. A lot of people have got a side hustle.
Anybody under 30 has got a side hustle.
Yeah, we do, yeah. So what would you recommend to these, entrepreneurs? Because, I mean, they've probably got no clue how to do it. I mean, surely the lenders check your affordability different. How does it work?
The first thing I would recommend is that you get yourself a decent accountant that will actually do your accounts on time and properly, so that they are presented correctly to a mortgage lender. Definitely get a decent accountant. So there's lots of different ways lenders look at self-employed income depending on the type of it. Keeping good records is great. You want to be able to show the lender that you are in a,
stable position.
Yeah, and you're a sensible person to lend money to. There are plenty of lenders out there now that will look at just 1 year's accounts. So if you set up a new business, you can still move with just a year's worth of books. Most lenders will ask for 2, just to prove that there's a comfortable trend and that there's not going to be an issue moving forward.
Interesting. I mean, in terms as well of keeping your bank statements clean, I mean, I know when I applied for my first mortgage, I had questions, asking who are these payments in and out your account? How clean do you have to keep your bank statements?
You want to live your normal life at the end of the day. Does that make sense? So, and you shouldn't really be trying to change your bank statements for a lender. There's obvious habits that lenders don't like, gambling.
Absolutely. Is that a big turn off?
That's a huge one. Yeah. So gambling, obviously, lenders don't like for obvious reasons. If you are spending an awful lot on gambling each month, should you really be buying a house?
Absolutely.
So there's not a huge. I understand why lenders don't like that. They're not bothered about you living your normal life.
Yeah. So if you're spending £30-40 at Nando's, are all right with that?
They're fine with that. Yeah. Living your normal life is absolutely fine. It's just making sure that you're staying within you're only spending money that you have effectively.
Of course.
And that you're not going over an arranged overdraft, that kind of thing.
Yeah.
Yeah, you want to look at it really if you put yourself in the lender's position.
Of course.
Would you lend yourself the money?
Yes.
That's the position you want to put yourself in.
Yeah. In terms then of deposits, I mean, a lot of the time, another thing going back on what my friends asked me is that I need a 10% deposit.
That's not true.
Is it not true? No.
Not at the minute. So there's plenty of low deposit options out there for first-time buyers at the minute. So standard is around about a 5% deposit now, obviously, assuming that there's a clean credit history.
Yes.
And there are plenty of schemes out there so there's stuff even with no deposit for renters, so you don't need a deposit at all.
Okay.
There's a scheme out there with a £5,000 deposit all the way up to a £500,000 house. That's like a 1% deposit effectively.
Interesting. Okay.
All these obviously depend on credit score and stuff like that. And then you can look at shared ownership where you only need a small deposit on your share.
Yes.
So there's plenty of options for a smaller deposit out there.
Interesting. And in terms of, let's say, shared ownership.
Yeah. So in theory, you only need a 5% deposit on that 50,000.
Interesting. Okay. And there's another thing I want to ask you as well. I mean, I've heard that if you buy a family home, let's say, which is worth £300,000, but you're just buying it for £200,000, do you need a deposit at all?
No, not necessarily.
Okay.
Again, subject to credit score, all that sort of stuff.
Absolutely, yeah.
That's called a concessionary purchase. It
there
has
you
a
go.
real name.
Yes, concessionary purchase.
A concessionary purchase, so you can effectively use the equity in the property already as your deposit.
Of course.
It needs to be a family relationship. It can't just be anybody.
Okay,
Does that make sense? But
does.
effectively, mum and dad are gifting the deposit from the equity that's in the property.
Okay, Let's just talk about something else. You mentioned gifts.
Yeah.
I want to discuss these, okay?
Yeah.
Because in my position, when I'm dealing with reviewing the source of funds and I can see a large amount going in, it can be an issue.
It's only an issue if you don't tell us.
Exactly. Yes.
I think it's the best way to explain that. You need to be open and honest with your mortgage broker. You need to tell them everything. At the end of the day, we need to know everything because we need to make sure that we're telling the lender the right information.
Exactly.
And that we're placing you with the right lender for your circumstances.
Of course.
The reason the gift needs to be declared up front, lenders are absolutely fine with family gifts. They just need to be told about them. The last thing you want is to not tell them, because people like yourself have got a duty of care to tell the lender if they think there's a gifted deposit.
Yeah.
If you report it to the lender and we haven't told them, they're going to come and ask questions.
Exactly. It can take time. You know,
it's just extra delays that don't need to happen.
We have to rigorously review the bank statements.
Exactly.
I mean, we have to check their ID. You know, there's gifted deposit confirmation letters if they're going to be, if it's a loan to pay back.
You need to see where it's come from, don't you?
Exactly. Now, one thing I want to touch on as well is the current mortgage rates.
Yep.
Going back around, let's say 2020, it was a 0% for a while, wasn't it? And
it was, yep.
Yeah, and it spiked up now to, it went up to 5.5 maybe.
The base rate's 4.5 today.
4.5,
yeah,
okay.
Today. Which is the 14th of March.
Yes.
2025.
There you go. It's the 14th of March 2025, 4.5%. Can you see it dropping down? I mean, that's the question that everyone asks.
I haven't brought my crystal ball.
Okay.
So, we get asked it every day. Obviously, every client that we see asks us for an opinion on what we think interest rates are going to do. Yeah. And right now, with the way that the world economy is, it's very difficult to say what's going to happen. Things are pretty unpredictable all the time. All the chatter out there, if you talk to all the economists and all the stuff that they're publishing, all the lenders, they send us economic reports every now and then. They're all saying that they're expecting base rate to go down around about 0.25 every quarter.
Yeah, they have mentioned a couple
drops.
Yeah, so they're
thinking maybe 3.75 before the end of the year. But
interesting, yeah.
Who knows? Depends on what's going on over in the White House, I think.
Yeah, we'll leave them to decide.
Yeah.
In terms of years for mortgage as well, I know there's a 25-year, there's a 35-year. What would you usually recommend for your clients to pick?
The shortest term they can comfortably afford.
Okay, interesting.
I think it's the best way to get that. So there's a bit of a myth that you must have a mortgage term that ends with either a 5 or a 0. Yeah.
Of course, yeah,
That's not a thing. So you don't have to have 25, 30, 35, 40. That's not a thing.
Okay.
You can have the term that suits you. We advise our term to our client's budget as opposed to tell them this is what it is over 30 years.
Yes, okay.
So if a client tells me that their monthly budget, after we've gone through all the bank statements and all that sort of stuff, and that their monthly budget is, let's say, £1,000 a month.
Yeah.
And when we look at the mortgage that they're looking to borrow, that works out at 24 years.
Of course.
That's what we'll do. There's no reason that we should be doing any longer term than you need to. All you're adding on is tens of thousands of pounds worth of interest over time.
Interesting.
And I'm all for making sure that my clients save as much interest over the term of the mortgage as they can.
Absolutely, of course. And in terms of, this podcast is aimed at first-time buyers, but they're not always, first-time buyers aren't always younger. They can be a lot older. Is there any mortgages available for, usually older people where, can lifetime potentially or?
Yeah, so there are. So obviously, we also have an equity release advisor in our firm, but that wouldn't necessarily be a first-time purchase. Normally later life because it's later life lending.
Absolutely,
after over the age of 55 at that point.
Okay.
First-time buyers, we do see them a bit older now, so we see them all the way into their 40s.
Now, what is the difference as well between a fixed rate and a standard variable rate? Because when the clients receive their mortgage offer, they'll review this, and let's just say they want a 2-year fix, it'll say 2-year fixed rate, then it goes on to standard variable rate, and you can see a huge increase in your payments. What is this? So
the way I explain this to my clients is that effectively standard variable rate is the rate that the lender picks out of the air. Yeah.
Okay. Yeah.
So obviously it's relatively in line with what's going on in the market.
Yeah.
However, if they want to change it tomorrow, they can do. It's not linked to anything else. So if they want to make it 8-9% tomorrow, they can do. So some high street lenders' standard variable rates right now are 8.74.
Crazy.
Some high street lenders' standard variable rates are like 6.74.
Oh, right.
Does that make sense? So it doesn't.
Yeah.
And they're both high street banks.
Yes.
So you've got one here at 8.74, one here at 6.74.
Yeah.
Both high street banks.
How does that work though? Is it like, the lenders are in the office and say, what should we give the standard variable rate today, mate?
I don't think it's quite that simple, but in theory, they can change it.
Okay, interesting.
Whenever they want. So a fixed rate is what it says on the tin. Once you've agreed that rate with your mortgage lender at the start of your mortgage period, it won't change on you for the period that you agree it. Okay,
very interesting. Now, in terms of applying for a mortgage, people sometimes come to me and say, I've been on, let's say, a banking website and I've applied for my mortgage myself. Or they'll say I've spoken to a broker. What would you recommend? Would you recommend doing it yourself or would you recommend speaking to a broker, and why?
Selfishly, I'm always going to say you should speak to a broker.
Of course, yeah.
But in all honesty, if you walk into a high street bank tomorrow or you go online, you've not seen a real person, there's nobody, in there. The person that's on the other end of that inquiry in the bank, whichever bank it is, firstly works for the bank. They don't necessarily work for yourself. Yeah,
of course.
They're getting paid by the bank.
Yes. Okay. Yeah.
Secondly, they can only offer you advice on that particular bank's range of products.
Okay.
So they can't tell you what the bank down the road is doing. Okay. And if the bank down the road is doing a better deal,
interesting. Yeah.
They may decline you. Happens a fair chunk, but they won't tell you why they've declined you, and they won't tell you that the bank down the road says, "Yeah, we'll lend to you."
Yes.
Whereas if you've got a good broker will know, firstly, they'll get it right first time so that you won't be looking at a declined application having to go somewhere else. And secondly, they will make sure that you are getting the right advice for your circumstances.
Yes. Okay.
As a layman, so to speak, as your average person walking into the bank, how do you know that bank that you've chosen to apply to your mortgage is the best option for you?
Okay.
You don't know.
No.
You're not going to know because you don't do it all every day.
Of course.
Whereas as advisors and brokers, we're putting our name to it. We are saying, this is the best option for you.
Yes.
And we're backing it up and saying, we are literally putting our name to it. Because if we're wrong, Financial Services Compensation Scheme is there.
Exactly, yeah. So you get access to every single lender and you can see what the best rates are suitable to your client, basically.
Yeah, so it's not always about rate, to be fair.
Okay.
Obviously, depending on circumstances and, all the affordability things that we were talking about earlier. Yeah, we can have a good look round. We do also get exclusive rates. So we've just had a really nice exclusive rate from Barclays that was cheaper than Barclays themselves.
Oh, right, interesting.
Which is nice.
Yeah.
So we do get those as well.
Yeah.
They tend to launch them through their intermediary channels. As far as the banks are concerned, they actually prefer it when we write the mortgage.
There you go.
They know it's got a better job.
It's more safe and securely done. Yeah. Okay. What are the common mortgage myths that you hear about?
Oh, I think it's hard to
put you on the spot here.
I know, I'm just trying to think of some.
Yeah.
3 years accounts as self-employed. Yeah, that's definitely not a thing. So
there's lenders that can just do it maybe, let's say 1 year?
Just 1 year, yeah.
Okay.
1 year. There's people that can do it for less than that, depending on what it is that you've done. But yeah.
Right, okay. Yeah.
It's a very small amount of circumstances that works with. Second one is that, like you said, we were talking that you need a big deposit. You don't necessarily need a big deposit, depending on your circumstances. There are some smaller deposit options out there.
Yes.
I can't think of any other.
No, that's fine. I'll put you on the spot there. So we'll go with that one there, yeah. Touching on before as well, because I mean, like we're saying, a lot of people ask about the mortgage rates. If you could give a prediction as a whole from a professional standpoint, do you think you're just going to continue to come down more and more? Or should people wait and see them to come down before buying the house? What would you recommend?
I think that goes back to what I was saying earlier. I don't think anybody should wait if they're ready to buy. Does that make sense?
Yes.
I don't think there's ever a right time and a wrong time to buy a house. If you need to buy a family home, why would you wait to buy it? The priority is your family. In terms of interest rates, like I said, I expect that they will continue to fall slightly towards the end of the year. However, what we're actually finding is that the lenders' fixed rates have already priced these drops in.
Okay.
So last time we got a base rate drop, lenders' fixed rates actually went up. Because they'd fixed them too low to begin with.
Yes.
They were expecting a bigger base rate drop.
Okay, interesting.
And as brokers, what we will do anyway, so if we apply for your mortgage today and you're not completing until the 1st of September, if there's a new deal for you between now and then, we'll just get you a new rate anyway.
Interesting, okay.
You're not committed to it until you've got your keys.
So you can get that new rate in between that time frame. Interesting. Now, something also you touched on earlier was about, a first-time buyer trying to get home out of the reach.
Yeah.
Do you see that a lot? And what would you recommend to them as well?
When we did see it a lot.
Yes.
We saw it a lot in 2022.
Okay.
As the world was coming out of COVID and everybody had a load of money.
Yes. Yeah.
And interest rates were still 2 point something. We saw a lot of, I blame Instagram. Everybody wants an Instagram house.
Yes.
Does that make sense? First time buyers want this Instagram house. And then we had a load of first time buyers at that point buying at like 300 plus. And I was like, this is crazy. This is your first time purchase. Some of those will be coming off very cheap deals.
Yes.
And will probably get a little bit of a shock.
That's it, of course, yeah.
I think you've got to be conscious that I think it's your first time home. It's your first home.
It is, yeah.
It doesn't have to be an Instagram house.
You don't have to post it on your Instagram story.
You don't have to show everybody.
Do the work yourself. It can be a wreck,
So it doesn't have to be. It needs to be a home for you to live in. Does that make sense? So I think overstretching yourself and then not living a life because all you're doing is paying for the mortgage can end up being quite miserable.
It can.
Two different figures. Figure that the bank says you can borrow.
Yes.
Figure that you should borrow.
Okay, there you go. And you usually would advise them on...
Yeah, so we'll have a conversation, again, all around people's budgets.
Yes,
after we've looked at bank statements, everything like that, we'll have a conversation like what's important to you, what other things is it that you want to do. So well
interesting, yes, okay.
But, you know, you might want to go on 3 holidays a year. Yes. You're not going to do that if you've got a huge mortgage that you're paying for.
So that's a service a broker can offer, then they can sit down with the client and explain this.
Have a bit more of a conversation.
Whereas if they're doing it themselves, they can't really get that background info, can they? What would you recommend then? 2-year fixed or 5-year fixed?
Can't do that.
Can you not do that? Yeah.
So the reason being is that it's specific to each person.
Of course.
So it really is not as simple as a 2-year deal's right now or a 5-year deal's right now.
Yeah.
Each client we see will make a specific recommendation for them. It depends on all sorts of stuff. You know, so it might be that one client goes, no, I'm adamant I want to relook at this in 2 years' time because I am confident that interest rates are coming down.
Yes.
That's fine. And that might be the right thing for them. But for somebody that is panicking about their monthly payments and doesn't want to, and just wants to know that that's what it is.
Yeah.
A 5-year deal might be better for them.
Interesting.
It doesn't, and then it might be that somebody wants a tracker or, you know, it's not as simple as whether you do a short-term deal or a long-term deal. It depends on an awful lot of factors.
Okay. I mean, you know, in terms of the mortgage standpoint, is technology changing the industry at the minute in time or not?
Yeah, it is and it's not. So there's things like AVM, so automated valuation models, AVM.
Okay, yeah. Is that when a valuer just drives past the house or does it online? How does it work?
Doesn't even physically go anywhere near the house, yeah.
Okay, so is that just coming into play recently or has that been going for a while?
They were doing them sort of mid, like 2016, 17 onwards, and then it really ramped up after COVID.
Yes.
Because obviously they were trying to make sure they could do so many because they couldn't get valuers out.
Yes.
And then lenders didn't revert back. Does that make sense? So
of course.
You can get an automated valuation, which does speed things up. If you're buying a house though, as in a brand new house, they'll still sometimes do an automated valuation. For argument's sake, you could apply to your high street bank. You think they're doing a valuation, and they're not. They're doing an AVM, so nobody's been anywhere near the property.
Yes, okay. That's
at that point, we recommend that you get your own survey.
Yes, of course, yeah. And how important are surveys going off that?
Well, I mean, I've been in this game for 20 years.
Yeah.
I would still get a survey on a house because I don't know what I'm looking at in each individual house. I'm not a builder. I'm not a contractor. I'm not a plumber. I'm not an electrician. I don't know what I'm looking at. So I'd always recommend that you get some proper advice so it doesn't cost you tens of thousands of pounds later.
And in terms of people, let's just say, you know, they're pretty cash strapped, they can't really afford the survey, would you recommend something else with them?
So depending on, basic valuations of the lender more often than not can be free.
Okay, yeah.
And then if you're looking to upgrade your survey, you're probably looking at around about 500 quid.
Okay, yeah.
And again, yes,
it's worth the £500.
It's not nothing, but it's also not ridiculous.
Of course, yeah.
And it's obviously just protecting you against any future issues.
Absolutely. I mean, going off that £500 survey, I think it is pretty important because, you know, the clients can usually report the issues to the solicitor or conveyancer.
And you can go and ask the other side and ask for clarification.
We can get them rectified. Yeah. Potentially there may be a price adjustment or I don't know, but that's kind of why it is important getting a survey, isn't it? Yeah, and like I said, because of the technology advancements, a lot of the lenders aren't doing their own bricks and mortar valuation. They're just doing a desktop or an AVM, so they're not actually going to see the property. Of course, absolutely. And I mean, touching on, you know, one key piece of advice you can give to first-time buyers. I mean, we touched on the Klarna, so of course don't use Klarna, that's that one. What about any other? Start saving as soon as you can, I think. Get into a savings habit.
It's really good. Lots of different ways you can start saving. Speak to a broker up front early. Even if you're not ready yet, a good broker will happily sit down with you and work out how much you can save each month and how long it's going to take you to save a deposit. A good broker will work with you before you're ready in order to get you ready.
Of course.
There's LISAs, there's all sorts of things to help you with saving.
So the LISA, touching on the LISA there. What is a LISA? How does it work?
It's a lifetime ISA, so it's government backed, and you can use it either towards your first home or pension if you get to a certain age. Okay. And they'll give you a bonus each year depending on how much you've saved in it.
That's it. It's usually, let's just say, £4,000 is the maximum you can save, and then you receive a £1,000 bonus. So that's interesting. So let's say,
money.
There you go, it's free money, isn't it? So whilst it's in play now, let's just say, you've saved up for 3 years, you've saved £12,000. You're going to receive an extra £3,000 on top of that. How important is that as a first-time buyer?
Exactly. It's just moving you forward that bit faster, isn't it? Effectively, the government's giving you another 25% on what you've saved yourself.
Of course, absolutely. So your business, HF Associates, what are the long-term plans? What do you visualise happening in the future? I mean, you've just brought Mark on board, your husband, haven't you? How's that going?
It's all right, we've not killed each other yet. It's doing good. No, it works really well. We've always worked around each other, so we don't have an issue with that.
And he's experienced in the industry as well, isn't he?
He's got 20 years experience as well, so plenty of experience between the two of us. Don't know, let's take over the world, or at least the Northwest. No, we've got plans to move into other areas of the Northwest, Chorley, Preston, Leyland, those kind of areas at the minute.
Of course, interesting. And where can people find you? Are you on Instagram, social media?
I know, I might be getting on a bit, but I still do socials. Instagram, Facebook, which is like socials for old people now, isn't it? Of course,
there's a few.
Facebook, Instagram, LinkedIn as well, and obviously our own website.
Of course. And what are your final advice for listeners?
Seek some proper advice.
Of course,
take your time to make sure that the advisor you've chosen works well with you. Make sure you save your deposit and you start saving early. So
Helen, thank you very much for joining episode 1 of the First Time Buyer Show. Thank you very much all for listening as well. Remember, I'm speaking to professional mortgage advisors, estate agents, people who've been in the property industry for years. So leave comments. In series 2, I'll be asking the professionals their advice on what you're asking me. Be sure to tune in for the next episode. Thank you very much.